Welcome everybody to Wall Street Reporter's next Superstock live stream for today, December 17th, 2020. We've got an exciting day for you today. We have, starting off with a Logiq. We have Brent Sun, the president of Logiq, with us today. The stock is running, making new highs, breaking out of a trading range. And I think it's in the $13 range, which is actually a lucky number. So we're going to find out what is next, and maybe the stock can go into the a different number, maybe like $40. We'll find out. So with that said, for anybody that's new to our program, again, our goal is to bring you stocks which we believe have 10x to 100x upside potential. Again, if you've followed our live streams over the past year, you've seen we've had a number of these stocks that have been 1,300%, 1,700%, 2,000%, and a whole bunch of 5x, 7x, 4x, all across the range. And of course, Logiq is performing very well. Stock started off in the $4 range back in, I think it was July. We're at a 3x right now, on the way to hopefully a 10x, right, Brent? We need a 10x for you to be, considered a potential stock. 100x would make you an official super stock, but 10x would put you on the right track. So with that said, what we're looking for is we're looking for companies which have they have three things going for them. Number one is they're going after massive multi-billion-dollar opportunities. They are right now at a key inflection point in their growth where things are about to take off in terms of revenues, corporate growth, development, where value is created, and most importantly, there are multiple catalysts in place which can drive that growth, create the value. So with that being said, I'm going to turn it over to Brent. He's going to share with you the latest presentation. We'll go through the Q&A. And again, it's your questions that make these events special. So please watch the presentation, ask Brent your questions, and then decide for yourself if Logiq is going to be our next super stock with that 100x upside potential. With that said, Brent, I'm going to turn it over to you and take it.
Great. Thank you, Jack. I'm Brent Sun, President and Executive Chairman of Logiq. I'm glad to be here today. I'm going to take you all through our presentation. Our standard disclaimer, which I will spare everyone from what could be a very lengthy read. Logiq, who are we and what do we do? Very simply put, we are an e-commerce enablement platform. We have two distinct business units: Logiq, which is e-commerce enablement for smaller businesses, and we've taken the approach of focusing on emerging markets. Our strongest one is Indonesia, which is located in Southeast Asia and is the fourth most populous country in the world. 260 million people and about 99% smartphone penetration, which is extremely important. We like to describe that business as a Shopify for mobile. And what I'd like to point out very quickly is, although Shopify is a considerably larger company, the similarities are such that what they do is enable small businesses to get online. The way that they get them online is through a website that can be enabled or is enabled for smartphones. When you look at emerging markets, it's actually a very low penetration of desktop and laptop computers. So creating a website that is optimized for a mobile phone really doesn't make sense. And so you have to have what's called a mobile solution, which we do. That's essentially our value add. And it's all we do on the Logiq side. Everything is mobile. So the key differences between us and Shopify are that, again, they focus on websites that can be accessed through a mobile phone. We focus on mobile websites that are built on the phone, accessed through the phone, and marketed by our customers to their customers via the phone. Our other business unit, Logiq, which we have a very very considerable amount of things underway. And if you look at our news flow this past few months, you'll see that there's been an uptick in both M&A activity and news surrounding our entry into the ad tech and MarTech area, which I'll talk a little bit more about shortly. But we view that part of the business as a very strong growth driver going into 2021 and onwards. And as we start to announce a few more things that are impending, all the pieces will fall into place, and I believe that you'll start to see how the growth trajectory is positively impacted by that. We've actually benefited from what is considered now the new normal of working from home. Certainly the way that we purchase things in our daily lives. Just the mere fact that we're doing presentations online as we are here has really enabled our growth. And so we're very thankful for that. If you look around the industry and look for publicly traded peers, you'll find companies like Shopify, SEA Limited, Wix, Jumia, Amazon, Trade Desk, Magnite, and BigCommerce, which recently did their IPO. These are, of course, larger companies. There are not a lot of smaller companies such as ours. We do get the question, how do you compete against giants like these? It's from the beginning, 6 years ago, it's always been about positioning ourselves for either a future strategic investment or even an acquisition, which we have publicly stated numerous times we are open to. We certainly have had conversations around that. If you look at our annual revenue growth, we've grown pretty well since 2016. Earlier this year, we actually acquired what is now the GoLogic business, which has been a good contributor to this year's revenues. We're on a trailing 12 months revenue run rate of about 43 million. Just to speak to the overall statistics for mobile commerce, which we really, which are the areas that we are focused around. If you look at the global m-commerce or mobile commerce market, it's unequivocally a huge market. Southeast Asia m-commerce has also been growing significantly. It is an important part of our focus. And certainly the US mobile commerce market has been growing significantly as well. Going back to Southeast Asia, around 90% of internet users use smartphones, and there's around 300 million people in the region. So it is a huge area of focus and a huge opportunity for us being 100% mobile. Talking a little bit more about our platform, what we have here are what we call the 4 pillars of e-commerce or mobile commerce. So there's marketing and analytics, there's e-commerce services, there's mobile fintech or the ability to pay for things through the phone, and then there's the logistics component as well. This year has actually been a landmark year for us because we have now rounded out our product and service offering to where we now encompass all 4 of those pillars. So we've got a lot of exciting things happening and that have happened that will take us into the new year on a very exciting path. If you look at the lower middle part of the screen, you'll see integrations. What that means is we tie into every major global payment gateway, every major social media site, and the ones shown here are just a handful of them. There's in excess of 70 all in. So again, this year has been one of building and positioning. Going into next year, which is right around the corner, you'll really start to see that kick in, and we believe that the inflection point is right now. So the question is, why Logiq? Why would someone use us? What I wanted to illustrate here is how we have brought our solutions to an existing problem. Because within any problem, providing a solution to that represents an impact to your business. So one of the things that we viewed 4 years ago is that in the Southeast Asia region, what are some hallmarks that all the major cities there have in common? And if you look at the underlying population within these urban areas, it's significant. I live in New York. We've got 10 million people here. But if you look in Southeast Asia, you'll see some very highly populated cities. Indonesia, in Jakarta, the population base there is actually 34 million. Bangkok, Thailand, 17 million. Manila in the Philippines, 23 million people. And then Vietnam, in Hanoi, there's 8 million people. So you can see very readily that within these big population bases, what do you have? Well, you've got a significant amount of traffic. The two photos here are illustrating what those traffic jams look like. And I spent 13 years in Asia and only recently came back to the US a few years ago. I've spent upwards of 3-4 hours in a car in traffic just to go 10 miles. I would have been better off walking. So this problem is actually increasing as people start to make more money. They purchase automobiles, motorcycles, scooters, so the traffic only gets worse. So this type of problem begs a solution. So with the current new normal of today, in these areas, if you want to buy something through your phone, which most everyone does, are you going to get in your car or get on your scooter or get on your motorcycle, or are you going to order it through the app? So we've taken an approach where even things as simple as going downstairs from your office building and getting lunch could take upwards of an hour. So how do you solve that? Our solution is an app-based ordering, payment, and delivery platform where it takes an average delivery time of 14 minutes with us versus 45 minutes for our competitors. So why is that? Okay, so here in North America, for example, and we've all ordered from DoorDash or Grubhub or Uber Eats. People deliver to us in the car, so they've got to drive, pick up the meal, bring it back, park, and then interact with the customer to find out exactly where we live. That typically takes 45 minutes. It's no different in emerging markets. It's actually a slight bit worse, but they're using motorcycles and scooters. It still takes 45 minutes. We've implemented a foot-based solution. So we've got couriers in Jakarta who make the deliveries on foot. There's no parking of any vehicles, so they can make a delivery in an average of 14 minutes. So what does this do? This shortens the time. It makes things a lot more efficient and brings people back for future business. As we start to expand that and layer in more products and services and gain more name brand recognition, not only does it impact our business positively, but again, as I mentioned earlier, in terms of positioning, we look around the peer landscape, and there are some multi-billion-dollar valued companies and multi-billion-dollar publicly traded companies that would be potential acquirers or strategic investors into our business. So when we talk about partners and customers, the big question is always, all right, you guys are a small outfit. When you do due diligence as an investor, one would hope that you see signs of validation and credibility in terms of customers or investors or partners. What we see here are some of our global partners. ShopeePay, not a household name in North America, but their parent company, C Limited, which is listed on the New York Stock Exchange, has almost a $90 billion market value as of today. That's up from their IPO 2 years ago at $3 billion. Tech Mahindra, a global giant in the tech space, headquartered in India, $6 billion market value. Orange Business Services in the EU, almost a $30 billion market value. Quinn Street, Purple, Cox Media, Line. These are some of the names and representative customers and partners who have actually chosen our solutions for our various business products, literally just in the past year. So all of these names are within this past 10 months. Financial highlights. Again, as we've grown, we have seen a very nice trajectory with trailing 12 months revenues again at 43 million. However, We believe, and we have said this on our last quarterly conference call, that going into 2021 and 2022, we expect significantly higher revenues and, more importantly, improved gross margins. So the targets we've put out for next year and 2022 are 43 million and 67 million respectively. If you look at our gross margins for this year, and historically, they've been in the high teens. We expect to improve them by double going into next year, and then almost as much as a triple going into 2022. Now, although we talk about 2022, and some people might say, well, that's another year out. Typically, the way that stocks will trade is they will start to forecast in future revenues, especially when taking a discounted cash flow model. So if you want to look at where we're heading, one thing that I like to point out is the recent news. And as recently as September, we appointed Tom Furukawa as our Chief Executive Officer. So I stepped down into the president role and executive chairman. Unfortunately, I'm actually busier today than I was before Tom stepped in, but now I'm fully focused on Southeast Asia and leading the initiatives there. Tom's actually been in ad tech for 26 years, and he built the Yahoo platform for ad tech. He's also worked at IBM Tivoli. He was at Magnite, which is listed on the New York Stock Exchange, and he is a veteran and expert in ad tech and MarTech. In October, we brought Josh Jacobs onto our board of directors as an independent board director. He was previously president of Omnicom. It's one of the top 3 largest ad agencies in the world. Much like Tom, Josh is a 30-year veteran in digital advertising and marketing. And then last month, we announced the acquisition of Fixel AI. Fixel has not only brought in a critical component of our going forward plan, but also several customers that we have jointly gone after, and you'll be seeing more that will not only improve our revenues, but significantly enhance our gross margins. And so what you'll also see are some impending news items about building out that platform and why it's important going into the new year. So what do these announcements mean? In addition to getting companies online, enabling them to get their business from an offline basis into an online basis, in being on a mobile phone, having a presence, being able to market to their customers. The biggest challenge for them after they're online is getting customers to find them. So how do you do that? Well, that is through ad tech and MarTech. And so our entire evolution of onboarding and enabling customers who have been offline and getting them online is now greatly enhanced by being able to bring them solutions to better advertise, market their products and services, and be found, sell more, and sell better. You'll start to see a lot of that going into next year. So look forward to some big things. In terms of the stock, in terms of valuation, here what we see is a peer group that encompasses both e-commerce enablers that are not only focused here in North America, but also some in emerging markets. We've also layered in several companies that are key members of the ad tech community. So Shopify, I think most people are familiar with them. More notably, their valuation metric is a 60 times price to revenue. Trade Desk, which has had an incredible run and doesn't look to be stopping anytime soon, they're trading at nearly 60 times revenues as well. Magnite, where Tom once worked and helped build their business, is currently at 12 times revenues, but their stock is up double just in the past month. C Limited, that I mentioned earlier, 27x. Stone companies, they focus on emerging markets, specifically Brazil down in South America, also a big multiple. Wix, another e-commerce enabler, and then Jumia, which has a focus in Africa as an emerging market in terms of e-commerce enablement. What we see here is an average price to revenue of about 33 times revenues. And actually, if you take a lot of the other medium-sized companies, and I added those in and added in some of the other large ones, those numbers wouldn't change. We've tried to knock out some of the higher ones and some of the lower ones and try to come up with a good peer average. And as you can see, even at $13 where we are now, we're still trading at about 1/8 of what the averages are. So again, we believe that our inflection point is right now. Key takeaways, we are, again, in e-commerce enablement. It's been enhanced by the unfortunate state of things with COVID. But as we start to look a little bit better in terms of the vaccine rolling out and getting back to our previous normal lives, we'll still be very much conducting business in our lifestyles by way of the mobile phone and the computer. And so our business is just now starting to take off, and we expect that to continue to do so. If you take time to look at our management team and our board of directors, which has grown just this year alone, you'll see that it has all the hallmarks of much larger companies. You'll see expertise and tenure of our management team and board that come from very large enterprises, and what they all bring collectively to Logiq is the ability to take us from where we are now well into the future and into a realm where we can also become a billion-dollar valued company. We have catalysts in place for valuation expansion. There's been some news recently about our initiative to undertake a going public transaction in Canada, which is the home of Shopify and a number of other multi-billion-dollar valued tech companies which are directly in our space, and then circle back to the New York Stock Exchange. We've publicly stated that those are in process now, and we'll start to announce more surrounding those in the near term. We are, again, on track for record revenue growth this year and certainly onwards. And the evolution of our business by adding the ad tech and martech component, thereby creating higher growth, is firmly in place. So with that, I'll end with our public peer comp slide again and open it up for Q&A. Jack?
Yes. Okay. Brian, you hear me, right? Okay. Perfect. Let's go to some questions that we're a little bit short on time. I want to ask you first, though, what's happening with the deal you announced with Indonesia, the Social Security Administration? There's like millions of people, fintech deal. For anybody new, just give us a snapshot of what the deal is and give us an update.
Sure. So last month we announced the partnership with the Social Security Administration in Indonesia. It's a government organization. They've got nearly 50 million members. That's a little over 20% of their population base. They're growing it year over year. They've also implemented pension plans and payroll services to other groups as well. So what you see is a base of 50 million members that they administer savings and payroll services to. They're opening that up to us to provide mobile services to that customer base. And that will all be through a mobile app. And our pilot project with them, which is already underway, is their 6,000 employees. We just recently announced that that's already in process. What you'll see on the heels of that is the entry into phase 2. And phase 2 is comprised of 5 million delivery drivers. So actually the same folks who make deliveries and do ride sharing within Indonesia and work for 2 unicorn valued companies, Grab and Gojek, they are part of a collective called Garda that is, it's actually in excess of 5 million drivers in ride sharing folks. And what we'll do is, as part of phase 2, we'll be layering in the same type of services. So they'll be able to borrow against savings. They'll be able to take pre-payroll loans for less than a month. We'll also be layering in our e-wallet and other logistics-based services. And then phase 3, which we expect to launch in Q2, will be broaching the entire 50 million member base for the Social Security Administration.
Okay, so so this guy's asking, when is the stock going to $20? So I'm going to get right to the bottom line here, Brent. What does this mean for revenues? This fintech deal.
Okay, so it's being modeled out now. What we've done is we've taken call it a better case scenario of 15% traction and a low estimate of 2% traction. We factored in two components. One is longer term loans, one are shorter term payday loans. What we came out with is on the 2% penetration, it comes out to being additive of around 5 million in revenues net to us on the low end, and on the high end at 15%, it could be significantly more, around 25 million. And we believe that is a relatively conservative approach. So those numbers have not been added into the revenue targets that we forecast for next year and the following year. We're trying to view this as somewhat of a bonus, if you will.
So that's worth basically. Okay, I'm going to answer this guy about the stock. So basically, that stuff is worth let's say 20x at fintech revenues. I mean, again, compared to the peers, you're talking about let's call it 200 million market cap additional on top of what you have now. So what is that? That's $20 roughly.
Just for that component alone, if you take the metrics, yes, I believe so.
Okay. Let's see here. We're going to try to run through a couple of questions because we're going to be tight on the schedule here. So D is asking you guys are partnered with SC. Don't they have their own digital payments, and how do you work with them otherwise?
Sure. Okay. You're correct, D. What we're doing with C is their Shopee Pay platform is indeed an e-wallet, and so the partnership with them is for delivery services. So our ATOS Go business unit in Indonesia has been making foot-based deliveries since last fall. And so when C started to branch outside of their own ecosystem of products and services being enabled by their e-wallet, they looked to us to try out a pilot program where our delivery people on foot are making deliveries of food and other grocery items to their members who use their e-wallet. And all along, our e-wallet has been agnostic, and so is our food delivery platform. So anyone who uses Shopee Pay or any of the other e-wallets in country can pay for those deliveries with their own e-wallet. So it doesn't limit us just purely to ours. So this opens it up significantly because Shopee Pay accounts for about 60% of all e-commerce transaction payments within Indonesia.
Okay, Brent. So you I think there was a Form D file. You recently bought some shares. You bought 10,000 shares the other day?
I did, yes. This week I paid $10.37 a share for 10,000 shares.
Okay, you have good timing. Stock is up now.
Oh yes, yes. I was very lucky.
What is so? How many shares do you own now? Because I mean, like, are your interests aligned with the shareholders, basically?
They are. I currently own about 250,000 shares directly. I also hold shares in my kids' names, and our entire management team over the past 5 years has actually foregone market rate salaries for shares. And just to put it in perspective, when I started 6 years ago, I outlined a very low salary for the foreseeable future. And even last year, I made quite a low salary, but I was supplemented in shares. And the same holds true for our entire team. And incidentally, we've also initiated a lockup of an additional 2 years on top of normal affiliate lockups. So, we're although we're able to purchase shares in the open market, We do so with the knowledge that even those shares purchased carry a 2-year lockup. So, I'm in for quite a long haul. What is our anticipated exit? We believe that if positioned properly, we could exit through a liquidity event of an acquisition.
Okay. Assuming at higher prices than where you are now.
Hope so.
Okay. Kevin is asking, when will revenue from GoLogic, PayLogic, Fixel, the recent, be part of Logiq earnings, and what will be the estimated contribution?
2021.
Okay. When will the revenue from? Oh, you can see these questions now, Brent? You see the screen now?
I can't actually, but
okay. Hang on. Okay, so I'm going to do this. How about now? Can you see it?
I'll have to do my slides if that's okay.
Hold out the slides. It'll make it easier if we. Yeah, I think that.
Sure.
Okay. I didn't realize you could.
Okay. When do I think the revenue generated from the partnership with KMSB, Tech Mahindra C Limited, will be reflected in Logiq earnings? Okay. Definitely 2021, because we've only recently started the process to take a percentage where we are majority owners, and we'll be consolidating those numbers in going into next year.
Okay, we got Phil asking, nice revenue growth projections. You mentioned about gross margin improvement. Should we expect slower growth on revenue because some of the initiatives taken to improve margins?
That's a good question, Phil. Thanks. So I wouldn't call it slower growth. Actually, what we did in Q3 and what we're doing in Q4, and we've actually publicly stated this on our historical business of Create App, which we have rebranded as App Logic. When we first started out, we signed predominantly white label partnerships, and those partnerships ended up putting us in about a 17% gross margin range. And so as part of that, what we've done is we've discontinued a number of the white label partnerships and started digital marketing on our own. And so the analogy of the hockey stick is already underway, and we've highlighted that. So what you'll see is an impact. What you saw is an impact Q3 and 4. But as we head into 2021, Q1 and Q2, I would not call that slow growth at all. I'd call that a transition into both higher revenue and certainly higher gross margins.
Okay. Let's see. I think we have time. We're going to ask one more question, and we're going to jump into the next presenter here. So let me just see what we have. Phil is asking about strategic partnerships. Can you provide more color what you'd be looking for in terms of partnerships?
If you have some, Phil, certainly reach out to us. I would say that there's two distinct candidates. In terms of emerging markets, what we've just signed in the past few months would be representative of the type of partnerships that we look for or are in current discussions with. So generally larger multinational tech companies that either have a presence in the region or have a presence in other emerging markets and are interested in the regions that we're in. So if you look at C, you look at Tech Mahindra, you look at KMSB, they serve very large markets. And so what we're doing is we are taking our historically smaller platform and enhancing it by the partnerships with much larger companies in order to scale up to their level.
Okay. Kevin is asking, what's happening with the NEO listing? When is that going to happen? When will that be? Dates? We need dates.
Okay. I'm a little limited on what I can say, and that is primarily because of sensitivity around the regulators in Canada. One thing that you don't want to be seen as doing is what's called pre-marketing, going into a going public transaction. So there's only a certain amount that I'm able to say. We have, through our shareholder letter, said that we've engaged an investment bank. We did not say who it is. We'll be free to do that when we file with the regulators, which we anticipate being very soon. One other thing I can say is that the NEO has committed to defaulting to the regulators. So upon going effective by the regulators, which is exactly the same as here in the U.S. with the Securities and Exchange Commission, when you go effective and you go public, the exchanges generally go along with that, and they do not have their additional review. So they would not be performing an additional review. They would basically be saying, okay, you guys are ready to get up and trading.
Okay, so Brent, let's kind of wrap up with what else can we expect? Can we expect any kind of major news into the end of the year, first weeks of January, as we head into this last stretch?
Yes. You can. I would say that there will be updates on initiatives that have been undertaken recently because everything's been moving very quickly. And I know that our current shareholders and anyone new watching us are eager to hear those updates. And we will certainly talk more about enhanced discussions around strategic partnerships and revenue generating opportunities as we start to finalize them.
Okay, Brent, last question, which we have to ask. It's a very important. In your opinion, top 3 reasons why investors should consider Logiq right now.
Sure. I think going into the whole due diligence issue again, look at our board and our management team and what our respective experience base and tenure have been at much larger companies and how we're positioned in terms of the depth and breadth of those teams. Secondly, I'd say look at the partnerships and customers. Although we are a smaller company in terms of market cap, I think that the type of partnerships that are indicative of much larger companies exist within our umbrella. And then third, look at our valuation. I mean, even at $13 a share, we're 4.4 times revenues, and our peer group is 33 times revenues.
Okay, Brent, on that note, I'm going to put up this thing over here, 10 baggers only. That's our motto here. So, we expect you to deliver.
Okay.
Immediately. Our audience is very impatient. We have a lot of millennials here. They want things like now. They can't wait 10 months for a stock to go 10x. They got to have it by Thursday.
I'm doing my best, guys.
Okay, Brent, we're going to catch up with you next time you have news, and we'll see you on the next live stream.
Wonderful. Thanks, Jack. Thanks, everyone.
Thank you, Brent.